The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, going back here to the Diagnostic Trading Hour. We got the S&P is currently up 2.5 points. We have the Russell down a little over 5. NASDAQ currently up 10 points on the day. Dow up 33. We'll get on over at our metals markets. We got copper right now is down 1%. We got gold down 0.5%. Silver down 1% as well, about 1% on the day. Hopping on into the energy markets and seeing what we got going on. Over on oil, we are looking at a nice move down of $1.50 right now, with over 1.5%. And we got natural gas moving big also, down 2.5% right now on the day. So there's some big moves right there in the energy sector. Looking at our ags, we got corn is up about 0.5%. It's only $1.50, but it's a smaller number there. We'll get on over at soybeans. We got soybeans down 9 points right now, so it's about a 1% move on soybeans. Pound dollar is down about 27 pips. We got euro dollar pretty flat on the day, up just a pip from settlement yesterday. We'll get on over at euro pound. Euro pound is up 24 pips. Dollar franc is up 1. Dollar yen is currently up 53. Euro yen is up 64 pips. Aussie yen's down 27. The Aussie dollar is down 56 pips. And dollar index currently just up a little bit, and bonds are heading on down at the moment. All right, so we had a lot of, good activity going on last night. Let me go ahead and bring that up, and I'll show it to you. We'll look through the charts. But just looking at those 10-minute MVPs there, nice, clean. Not only do I have the long up there, later in the day, but right around 8 o'clock, between 8 and 9, we got a nice short going on down there on the euro dollar, and a really solid move. And we'll pick up where we're at right now here. I'll come back and do some market reviews for current market status, but just to show you, I want to get y'all starting to think about those nighttime trades, especially on Nadex. Very simple to do. Here's the pound dollar on 10-minute MVP going down, just, coming off that settlement line, moving on down, hitting the 0.5 deviation level. Going on into dollar franc. We can see sort of the opposite going on. Got a big long right here, about 8:30. Give another little long. Sort of went flat at that half deviation, at least going into 3 a.m. But got some nice trades on the U.S. yen. And pulling that one up, we got a nice little move there. It actually broke into the 0.5, on to 0.7, moving on to 1. Some nice, good movement last there with the U.S. yen going on. Aussie dollar had some spike strikers going on today. Look at all these. And so just a perfect sell going right in the evening. So just trying to highlight some of these evening trades. A lot of people don't even think about evening trades, where they think there's not enough or they're not there, and that's sort of what I'm trying to show you is the opposite. It's true. You can go and buy right there. You can sell right here. Write all these on the spike striker. Paul mentioned those on the contest there. He did really well. But so lots of trades that you can take advantage of, and this is just, notice how it's monitoring 5, 10, 15-minute spikes. Breaks above the high, we buy it in the money, and it goes up. And, basically we expect flat to, up or down, right? So here it goes in. We got a big volume spike. It's tracking all the different time frames. It's showing you the old ones that didn't hit, but the ones that did hit right here had a sell. It broke the low. That was the sell entry, and then it moved on down without me having to have 3 different charts up and all the volume. Makes it a lot easier. But those are great, simple trades, and those are just a lot of nighttime trades. Let me see if I can find this, but there's so many different things you can trade in the evening over on Nadex. And I want to see if I have this little expiration calendar thing I made a while back. Maybe I can pull up for you and go into. And come on, my screen just give me a little trouble. Okay. So right on up here, what you can see is all these contracts that are traded at night. Now you got Euro Yen every hour. But you got Japan 225 going on right here, and they have those intradays that you can trade in the evening. You got all the other FX pairs, okay? Basically, there's 5 FX pairs that have hourly expirations and 5 that have hourly expirations during the day, and then they have like 6 daily expirations as well. So they do have a couple nighttime expirations. But this just lets you see, all these expirations. I mean, it's expirations at 7, 8, 9, 10, 11, 12, 1, 2, 3, 4, 5, I mean, all the way down the list, all the way till 5 o'clock. So as a nighttime trader, I mean, I showed you, a handful of trades, pretty much on almost all of the FX pairs that trade in the evening that you could have traded. And even, the other ones you can still trade because, a lot of times I'll do these trades on these MVPs. If I'm going to I'll look at at 3 a.m. So, on a binary, or I'll look at, the spreads. You got, you can trade them from, 7 to 11, then 11 to 7, or 6 to 11, and then 11 to 7. So you can put those trades on. So there's some pretty cool, easy trades to do. You just got to sort of get used to it, get in there, start playing with it. But lots of good trades that you could cover during the evening hours. And if you don't know about Nadex, hop on over to TFNN.com. And then right here on the right side of your page today, go ahead and go to TFNN.com and click on Nadex. Once you clicked on Nadex, go ahead and click on Demo Trading Platform and enter your whatever username you want. First name, last name, phone number, and email address, hit apply for demo. You'll then be able to log in to the Nadex platform. Right over here, you'll just click your demo account. You'll log on in. And then you'll have $25,000 of funding money. You can go to your My Account. You can go to your settings. You can update your password with one that you'll remember. Put in the one they gave you in your email. And put one in that you'll remember. And, there's a lot here. Here's the, FX binaries, all that stuff. Now, this can get really complex. Look at all these different expirations, okay? Tons of expirations. And it can be massively overwhelming. That's why I made the scanner. So you can go in, and you can also go over to TFNN.com. You can check out the scanner for free. And when you look at this, you can go, I want to look at euro dollar. And here's every expiration, but it's all on one page, one click. Notice here we have to go to view all of the, or dollar CAD, I guess in this case. To view all of these, we literally have to click down each and every one of these. So if I want to do that on dollar CAD, I just go over here, I go, I want to look at dollar CAD. And here is every single expiration. Which, I mean, may not sound like a big deal, but every time you make those clicks, that's more time. Now you go, well, that's still a lot of information to look through. Yeah, that's all the contracts being listed. So that's a lot of information to go through. I mean, that's definitely very true. Tons of information to look through right there. So how do we simplify that? Well, we can go in and go, what do I want? Maybe I want an in-the-money contract. And maybe I want one that expires within the next, 2 hours. Instantly, I drop all of these, because they had expired in greater than 2 hours. Instantly, I drop all the out-of-the-money contracts. That helps tremendously. Now, do I want a trade that has a profitability of only $6? No, maybe I want one that has at least, we'll say, 15. Okay, so we'll go over here, and what we'll do is we'll just say you've got our min-max risk, okay? So I'll say maximum risk of $85, which would be minimum profit of 15. And there, now we've dropped out all the ones that have less than a $15 risk. We got the 2 PMs, we got the 3 PMs setting up right there. Maybe I got a buy signal on Spike Tracker or whatever. I go click buy. Now I just got my buys. And check this out. This is a really cool thing to see. You notice the I and the D? That's intraday and daily. So you can literally see right there, if it was an intraday or daily contract. But here's the beautiful thing. It's in the exact same spot. All the 3 p.m.s are in one spot. Whenever you go to Friday, you're going to have intraday, daily, and weekly all in the same place. Versus what we were looking at before, you have to go over here. And if you want to look at all the ones that expire at 3 o'clock, you got 3 p.m. intradays, 3 p.m. dailies, and then on Friday, you also got your 3 p.m. weeklies. So you got to go to 3 screens, and you're probably going to be like, you know what, that's too much work. And, I mean, I'm just being real. We get lazy. And you're like, that's close enough. That's what I'm looking for. And you don't know that you didn't get the better strike. And it can make a massive difference. Sometimes you'll actually find, I mean, look at this. Here's a perfect example. Okay? We have 2 of them. It had to change price on me. Hold on here. Let's see if I can grab it. I want to see if I can grab it well. It's not the exact same. There we go. Grab it. Okay. So right here, what I want you to notice is how these are the exact same price. The intraday and daily for today at 3 o'clock are trading at the same price. Every once in a while, you'll see it move off by a tick or something like that, or $1. But look at the strikes. They're not the exact same. It's 1182 and 1180. Well, if I bought an 1182, because I was looking at the intraday 3 p.m., okay, and it expired at 1180 or 1181, let's say it expired at 1181 or expired at 1182, I would lose all my money on that trade. Okay, so if it went down against me, if the market dropped a little bit and it went on down and it expired at 1181 or 1182, I lose. But if I would have bought the 1180 at the same price, then it would have expired at 1181, 1182. I would have been profitable. So for no more risk, for zero additional risk on the trade, and for 2 ticks more, which 1 tick, 1/10 of a tick can make all the difference on a binary. I don't plan on holding them to expiration, but sometimes they go. I'd probably say there's a good, you will have a percent will just go. They won't hit a profit target. And those 2 ticks could literally be a difference of $80 on just one contract. What if you're doing 10? That's $800. Okay? So that right there pays for itself. Using that, it's worth using the scanner. It's not a newbie tool. It is a newbie tool. It's not a pro trader tool. Okay? Newbies, more than anybody, need this because they need to know to check. But even a trader who's doing this every day, are you going to go in and go, okay, 3 o'clock. All right, and I want that one right there. Okay, is there a better one? We got 1180 at 80, 150. Switch on over 1182 at 81. Okay, so that's about 50 cents different. So your mind that's too much to handle. We'll talk more about why this is so important when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And what we were going over was how using the platform, one of the many disadvantages, but you go back and forth on the expirations. And so you're trying, okay, 3 o'clock versus, say, 3 o'clock, if you're trying to look at 3 o'clock. And it would be so easy not to even notice. And this is, I mean, one, you'd have to be disciplined enough to always go back and forth. Your mind and eyes are going to have to be fast enough to calculate and look at everything. But the biggest thing is just one simple mistake could cost you, like I said, as little as $80. 10 contracts, 80. Do 100 contracts, you go from 1 at 80, 10 at 800. If you did 100 contracts, you're talking about $8,000. All because of a couple simple ticks in the strike. And you can get more room for this same risk to be profitable. I mean, there's no doubt that the 1180 has a higher probability of expiring in the money than the 1182. But just the way the market pricing works on intradays versus dailies, sometimes what you'll see is you'll see that exact same risk setup. And what you really want to do is you want to be picking that one that has the higher probability. So if you can get a higher probability deeper in the money trade for less or the same risk, it's a no-brainer. Okay? So you obviously I want that deeper in the money. Anyways, all right. So that's just one of the, as I'm going through things each day and I see something, I want to bring up those lessons. And I didn't even have that on my list today. But it's probably one of the most important things I can teach you when trading. And it's one of the many reasons why I made the scanner was to save me from little things like that. All right, let's check it out. We got, some, moves going on this morning. Going on in, we'll check it out. Here's the Russell, bit choppy going on. Just across the board, and plenty of good P2 setups there, but pretty choppy. Gold had some decent moves happening, and we'll go ahead and pull that one up and look at it. It moved on up and then pulled on back down and gave some really nice shorts into the morning. So gold was really a pretty nice chart this morning. We'll go on over at Dow. Dow, along with the Russell, pretty choppy on its move overall. And not quite hitting a deviation, and just Dow being the Dow. So we got the S&P had a nice deviation bounce, came on down, hit the 0.5, and just bounced right up into settlement. Russell doing the same thing right here. We can see it came on down. Russell had the biggest move down on a deviation move level. It actually did hit its deviation out of the 4 indices. And bounced on back up. So, last night, what else do we had going on? Gold extended this big rebound. We talked about that from 2014. So China's getting back into play, so, getting off its break there. Asia, had a pretty hard time that affected oil. And let's bring up that oil chart. So we've been talking about oil off and on. I think everybody's been talking about oil off and on. And let's see, this will work. I have a dollar CAD chart up. Let's go ahead and hop into oil down here. Let's see here. Letting that get on up there and going. So oil, we were looking at $89 and talking about how that was a big, very important break-even level. That's something that Pesavetto brought up. And we've been watching that level, and it keeps bouncing off. When it broke it, moved down, and it did. It moved down solid, and as big of a move as that is for today, that was the expected move by the market today. That was the deviation move by the market. We expected it to move that far, and it did. And it's sitting right at 87.34, which is exactly a -1 deviation move from the previous day's settlement. So I love the accuracy on that. That's like, hey, you know what? We're getting this big breakdown. How far of a break should we expect? If we break that 89 level, we've been expecting. If we really get a solid break of that 89, for it to move on down, well, it did start breaking it after the close of the pit yesterday. Where would the expectation be to go to? Be to go down to 1 deviation. And boom, it went right down to 1 deviation. Let's see, some other things we got going on. I'm just trying to, list through some of the things that I've been looking over. Let's see, the Australia job gains, they came in really positive, but were they really positive? Because the Aussie did not seem to buy it. We'll talk about that when we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come back here to the Diagnostic Trading Hour. We're talking about oil and how it broke that 89 level, broke on down 87.34, and it could go a whole lot lower. I mean, potentially even down to 50, breaking that level. Obviously not today, but at a long-term time frame, it could easily pull back. And that sounds ridiculous, but I mean, just go back and look at a chart. Okay, we've seen it go down to 50. We've seen it go up to 150. Okay, so anyways, moving on down there, and on top of breaking that level, not only did that happen. And it's sort of funny. You read the news, and they're like, "Oh, it's all because of the oil inventory report," right? And I mean, literally, there's a news. I look at these reports, and it blows me away. Let me see if I can bring one of these up because it's sort of funny. Where did it go? Come on. Okay, yeah, right here on Market Watch. You know, which I like Market Watch, but. Let's see if this will come up or not. I'm not sure if this is going to come up for me. But if it does, the story, oil futures add to losses after surprise supply increase. Okay? Basically saying that the oil inventory report that came out, which was a surprise and was higher, the expectation was an increase by 2.1 million. It was an increase by 5. If we actually look at the actual oil inventory report here, we always look at the third paragraph, first two sentences. 5 million. Well, that's about the 2.1 they expected. And then it says that number is in the upper half of the average range for this time of year. So, yes, that was a surprise. But what time did that report come out? Let's see here, 10:30. Okay. So now let's go look at 10:30. Let's see how much did that report impact the further losses. Okay? And check this out. We got 10:30, so the market does a little pullback going into the news. Okay? It's right about here, and then it dropped down. Okay, that seems like 40 cents. But is it 40 cents from the low of the day? Let's see what it is from the low of the day before that, today. Okay, so basically oil dropped about 20 cents from the oil inventory report from its low of the day. Compared to how far was it down before that even happened? I mean, it makes for a great news story because it sounds right. Oil inventory should be crashing oil. Of course, by the time you read that news story, I think it was a little late. By the time you saw the oil inventory, it was a little late. We're going down here. How low is it before oil inventory even came down? We had a $2 drop since 2:30, maybe not 2:30. Maybe I need to adjust that. But let's see, go over here, 2:30. There we go. Pretty close. So, yeah, we had a $1.85, okay? A $1.85 drop, basically, since settlement yesterday from before the news. And let's see where we sitting at now since yesterday's drop. We're sitting right at, I got $1.67. We're actually a little higher than where we were before the news. Okay? So the oil inventory did not add to the sell-off. There's a little spike up, there was a little spike down, and then it popped right back up. Actually, the opposite of what you would expect to see on an oil inventory report where inventory came in better than expected. You expect it to actually go down, right? More supply, lower price, okay? Because the supply goes up. But that wasn't really the case. So it popped up actually quite a bit. And anyways, I just want you to learn how to, I want to bring that up. Not to be like trashing the news. As you know, I trade the news. But also, I don't trade the news usually very directionally. I try not to even take into account so much what really happened that was good or bad. I mean, I'll look at it. I mean, I'm like anybody else. But when I'm looking at this news, I'm going to look at expected ranges, expected movements. I'm going to think about where the thing's sitting at one deviation. Pops down, pops up. I mean, it's already moved its expected move. I'm going to look at things like, spikes going in and seeing what kind of trades I can find, and be as fast as I can on those. I'm going to look at expected movements, like I said, on the hour. If we go in and pull this off, let's look at just the expected move alone. All right, so let's pull that up. Expected movement and expected range here. There we go. And let's look at the expected range on oil and see, was it outside of the norm? Okay. We had one big outside the norm. That actually happened last night at about 10:30. And that was just basically the market just going there and boom, it just popped. It dropped big for that time of night. Usually, we're talking, a matter of a few ticks. The usual move on that during that hour is, 7 ticks? Okay. And what do we move? We moved at a maximum, usually it's 7 to 8 ticks, and it moved like 55. That was a big move. We had another big move, but it pulled back, okay, on back in the following hour. And then we had one other big move that happened earlier today. That wasn't even, that big of a move. It wasn't even during the release. Actually, the pullback was after the release, about an hour after the release. More than an hour after the release, was actually a bigger move. The inventory report itself literally hit expectations to the tick. Okay? We had an expectation of a movement from high to low, right there, of 70 ticks. And, okay, not to the tick. I'm wrong. It moved 68 ticks. So within 2 ticks of our expectation, I had an expectation on my stats of 70 ticks of movement on oil inventory from high to low. And we got 68 ticks. So nothing abnormal there. little bit of a breakout, like I said, on 2 out of the 24 hours of the day here that actually, exceeded and stayed outside that pretty dramatic amount. But it was not the oil inventory news that added to the losses, okay? And so it's just always interesting when I see some of those articles and I'm looking through them, and some of them are right. But sometimes I do that Monday morning quarterbacking, and they don't quite know to go look at a chart. So it's like somebody needs to, give them a little tutorial on, how to look at a chart. All right, so, but that's putting oil at, a 27-month low, I believe, and we got Asia shares are tumbling down. So, and we got Europe, has had some issues. There's all these global growth concerns going on right now. So we'll see how it's able to pull it off, but, a lot of concerns happening. Even the Nikkei hit a 5-week low. We go over, let's see if I have that one built in on here. On this specific computer. See if it'll pull it up. I'm not sure if I have that data feed in here. I think I do. We'll find out in a second. Oh, I don't think it will because I think it's live only. Oh, there it goes. Okay, well, never mind. I got so many data feeds on so many different computers. Okay, so Nikkei's been tumbling down and had a little bit of a bounce lately, but overall has been really going down. It hit some new lows today. And it depends upon which exactly one you're looking at. But anyways, there's just a lot happening. IMF is also downgrading fuel growth. So that's interesting that we see oil drop. But and then we got some other stuff going on. Let's go ahead and check out a couple other pairs. Let's check out pound dollar and see some rejection on price here going on. And pound dollar moves on up. And today it does not even, it goes up to about 6,100. So right over here we see it just bust 6,100 and pops right back down to 60.50. That's just a half deviation move down. So that's really not a surprise. But it goes up and it keeps bumping against that settlement and then pops on back down. We can see how it's done previously, but I mean, that's pretty much how it goes. But a nice move right there, and we still got plenty of movement left for a potential deviation move on the day. We haven't quite hit that, and we got about 20 more ticks or so, 10 to 20 more ticks on pound dollar, potential movement. Obviously, it's got to break through this 0.7 level. We just had a pretty high volume spike there on 6B. Come on in on the pound dollar. So we'll see if it has enough to keep going or if that just burned itself out. Often we see these volume spikes. We're going to see a reversal. So let's see if it can keep up that volume steam. It had high volume, low volume, high volume. We're in the low volume stack right now. We'll see if it does another high volume to keep on pushing on through. Let's see. Euro yen's been doing some impressive stuff overall lately. Let me pull up the euro yen. And looks like it's trying to just push higher and higher. Let's see how much it's on its regular move there. It's sitting right at 1 deviation, and it had a little drop down yesterday, but it gained it right on back, pretty much all of it. I mean, look at that. So you got a little cup and handle thing or whatever people call that going on out there. But anyway, so right back up to 1 deviation at the moment, and just sitting there waiting out. So good, nice move there on the euro yen. Let's see here. We got a euro pound. Moving on up, let's see what's going on. And supposedly moving on up to several week highs right now. And we back out there. We can see a little bit of activity going on. It's definitely going up, up, up. So yeah, so we're getting some pretty good movement. And busting on up, working on 3 week highs here, right at the 78.99, 7,900 number. And that is a deviation move on the day. 0.932 is where we hit on that high. Let me zoom on back in there. And so right when we got up here, you can see the deviation market, 93% of a deviation. So just right off shy of 1 deviation move on the euro pound. But euro pound doing some pretty hefty climbing there. Let's see. What else do we have? Well, let's check out. We had the CAD. Iron Condor. We go back over to the dollar CAD, and from the news trade from yesterday, or this morning, I mean, And all right, we had that one from yesterday. We had tonight. I'm trying to see what all we have on the list. That might be an old one I have in my notes. CAD, housing. Well, that was yesterday's. Okay, so looking at Wednesday, we got or maybe that was today. Get my dates right. There we go. Okay. Various reports. And the one to focus on was the CAD. Okay, so I was right on my notes. Dollar CAD over here, looking at 8 a.m. to 10 a.m. So we got an entry right here. We get in the trade at 8 o'clock. Okay, and we look for a lower spread and an upper spread where the combined maximum profits is no less than $20. And we take that to 10 a.m. It expires out. It moved 14. Not a massively profitable trade, but still within our expectations. And it did move, 14 ticks there from open to close, and from high to low, we got a little over 20 ticks. So, but we don't really worry about the high to low. We worry about from where we get in to where it goes up or where it goes down, because we're doing a neutral range-bound trade. So would have captured about a 25% return on that trade. Be able to get that bill. So another news trade in the bucket. Not too shabby. Let's see. I know we're about to add in earnings season stuff. I'm going to be going over that with you soon as well. And let me see what we got over here. Okay, so all right, we got tomorrow. Let's see if we have anything tomorrow that I want you to make. Okay, we do have a few iron condors for tomorrow, so I want to make sure that you have those on your list. Okay, let me back out of here, and we will bring these up for you. All right, so got that right there. Again, I want to make sure you do have these iron condors on your list before we wrap up. Going to look at tomorrow. We got several things going on, and let's walk through it. Okay, we got the official bank rate coming on out of Britain. That's their Fed funds rate. And that's from 7 a.m. or it's going to be released at 7 a.m. So we're looking at a 6 a.m. to 8 a.m. expiration. We're looking for a $35 minimum profit. Usually they'll inflate it pretty heavily. Usually we don't see any kind of change. And it pops, and then it drops right back to where it was before. So that's what we're looking for. Again, the one downside, we don't have the euro-dollar interest rate announcement and the euro-dollar press conference to stun it a little bit. So just be aware of that. But again, entering at 6 for 8 a.m. expiration for $35 minimum profit on the iron condor for tomorrow morning. We're also going to have U.S. unemployment claims, so we're going to look for volume spike trades on that. We're going to have natural gas inventory. We're looking for volume spike claims trades on that. Going into the Aussie dollar home loans, that's going to be coming out. And we're looking at a 6 p.m. entry for an 11 p.m. expiration for a $30 minimum profit on that trade. And so that gives you a nice evening trade. And again, that's doing an iron condor, buying the lower spread, selling the upper spread. And we got a pound-dollar trade balance report. We'll talk about that one when we get back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this price and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. And we're going through the news trades. We just talked about the pound official. We talked about Aussie dollar home loans. And, going into, let's say, also tonight, we have a straddle report on the Aussie dollar. So on the Aussie dollar employment change. So right here, we're looking at getting in 7 to 9. I don't know why I have 6 to 9. So still showing. And let me update that. Okay. Okay, so what we're looking at on that one is a 6 to 8. Or so that would be a 9 to 11, right? Let's say 7 to 9. There we go. 7 to 9. Or a 6 to 11. Or a 7 to 11. And so the reason I'm saying that is the spreads last. Basically, there's ones that open at 6 and go to 11. That's 5 hours. All the other ones are only 2 hours. and the trade comes out at 8:30. So you also could look at a 8 to 10. So all those are the combinations, surrounding it, okay? So 8 to 10, 7 to 9, 6 to 11 would be the three possible entry and expiration times. Why would I give you so many? I expect that move to happen in the first 15 minutes, okay? But you may be able to go in and look at the prices at different times to see if you can get that price. I mean, you may have to get in at 8 o'clock. You could even do, an 8 to 9. So you just want to make sure that you are staying within that $35, maximum risk requirement. Being a straddle, it's a little bit different. Now, ideally, more time after expiration is better, so long as within the maximum risk. Okay? So, anyway, so we got that trade for tonight. We got the two we went over for tomorrow. We have one more for tomorrow night. We got the pound-dollar trade balance report, usually a non-event, entering at 11 o'clock p.m. Eastern Time for a 7 a.m. expiration, and looking for a $30 minimum profit iron condor on Nadex. And that right there will wrap up our main news trades for the week. We'll have one more trade. We're going to go in. We'll have this cat employment change report for the end of the week, just to let you know what that one is. But that's 8 to 10 a.m. on Friday, and we're looking for a $35 straddle, maximum risk straddle. That's where we're buying the upper spread and selling the lower spread, okay? So buying the upper spread, selling the lower spread on that specific trade anytime it's a straddle. A straddle, again, using the spread strangles are an option. That is using the binaries. But, I've talked about differences on this before. And the problem is on the binaries, if you don't hit your profit, you lose everything. On the straddles, you can still easily break even or have less of a drawdown than full loss. And that, of course, helps your stats overall. Let's see. What else do we have going on? That's all of our earnings. Earnings are going to be coming out next week. I'll be listing those off for you. Hopefully I'll have that list updated and accurate by tomorrow. Earnings dates move around and fluctuate. So I have to go in and, double, triple, quadruple check it. And once I get that all up and running, we'll talk about some, earnings trades, how they're going to impact the market. Obviously, a big stock like a Google can definitely have an impact on, the NASDAQ, right? So there's other stocks that have a similar impact. We'll have to start digging into those more. But they may give us some opportunities to trade on Nadex, okay? And we'll be looking through these each day next week on the show. All right, y'all have a great day. I'll see you tomorrow on the Diagnostic Trading Hour.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.